Well, good evening, everyone. Welcome back to the channel. Sorry for the delay, but these productions take a lot of, or in some cases, some prep work. Bear with me here just a second, and we'll get started here in just a second.
The IRS deadline?
Had to pause that. Okay, so we've already got a little bit of a backlog of comments here. I'm going to have the comments in the left-hand side over here, and I'm live in the Discord as well. So we're going to talk about some important dates coming up here for our YieldMax funds, and we're going to go in depth in each of the 22 funds and look at the underlying holdings and if they're winning or losing some of the trades, and we'll go from there, and we'll have free form discussion as well too. So let's see, we've got some comments here. Two people said ready. Yeah, I had to change it a couple times, but here I am. So welcome everyone. Welcome. Okay, as soon as I'm able to drag this down, so I'll be live in the Discord as well. Let me see why this isn't moving. Oh, who joined? That was quick. Go ahead and talk. Hello? Oh, he muted himself. Okay, so let's do this. So first things first, I said this morning in the
I'm
live stream.
here.
Oh, hi, how are you?
Doing well, thanks. Excited for the show.
Awesome. So this morning I said that the dividends were going to be declared tomorrow. It's actually going to be Tuesday, but who knows, we might get an early announcement. That's always possible. But the dividend announcement is actually for the fund of funds and the ultra ETF. So April 16th, which is Tuesday, is the declaration date. I guess they didn't want to mix it with tax day. Who knows? But yeah, the 16th is the day. So by Friday, we should have them. And that's for Ulti, YieldMax, and YMAG. So for Ulti, I did a detailed video of the holdings Friday. I looked at a little more detail from these two this morning. But of course, YieldMax is like a fund of funds for all the covered call ETFs. So you'll notice we've got really all of them: AI, AMD, Amazon, Apple, Coinbase, Disney, Meta, Google, JP Morgan, and I can download it for more detail, which I'm doing now. So we'll pull this up. Okay, we'll do one and then I'll give people in the Discord a chance to speak. So let's see, this should be up in the spreadsheets over here. Let's see. Let's see if this is it. This is my, oh yeah, this is YieldMax over here. Okay. So all this does, it just shows us all the holdings. So there should be 19 funds: ExxonMobil, Tesla, SQY, PP, OARK, NVDY, NFLY, MSFO, MRNY, JPMO, GUI, some treasuries: FBY, DISO, Coney, Aptly, AMZY, AMDY, and AIYY. The number of shares in each, there's a different weightings because some are performing better than others. Looks like there's a big portion in Tesla, according to this. That's interesting. Number of shares. Oh, wait a second. That's because it's like a half a share. Let me do this here. I'm going to add a column to the spreadsheet over here. And let's see. Let's do this. I can determine the weightings. It's going to be equals this divided by the sum of all of these to determine the weighting. There we go. So each one of these, I think, should be a similar percentage. So this is going to be, hopefully this will be really valuable to you all here. Let's see. Okay, so
Are you not including cash?
I did. I included the First American Government Obligations Fund. It looks like that's 53% based on the weighting over here.
No, the bottom line is cash and other on the bottom?
Oh, you're right. You know what? They have the weightings right here. What am I doing? It's pretty equal actually. Yeah, column J. So let's see. We've got the maximum 5.67%. That is in AMZ or at the Amazon one. The minimum, and I guess they would rebalance this. Oh, the minimum is actually in the government obligations fund. Cash is 0.29%. So my formula would be right if I included that. You're right. Um, that should be F21. Just make sure it matches. And it doesn't. Anyway, oh well, forget that one. They have weightings over here anyway. Looks like number of shares are equal over here. So most of them, I think they were aiming for like 4%, maybe 5%, but obviously because some of them are up, some of them are down, there's going to be an unequal weighting compared to how they started. And here's the fund price of each of them, actually. Let's see. Move this over there. So the AI one is down to 1221.
Can you make the screen a little bigger or not?
Yeah, I should be able to zoom in. There we go. Yeah, that was kind of small, wasn't it? Okay, so there's dollar signs for the price. I like to use currency instead of that. Let me do this one here. We like to see our money in dollar signs. Currency, there we go. Okay, so yeah, 1221 for AI, AMD 1804, Amazon 2338, Apple 1705, Coinbase 2603, and this was as of Friday, I think. Disney 2045, 22 for Meta. Ignore this one. The Google Fund 1752, 1991 for JP Morgan, 2033 for Moderna, 2210 for Microsoft, 1820 for Netflix, 2663 for the NVDY fund, for OARK 1215, PayPal 1890, Block 2312, Tesla 1533, 1842 for ExxonMobil. Just for fun, let's
Do
see
you
the
see what they're missing?
They are missing, let's see, they've got 19 of them in here. What, Ulti?
No,
Well, there's 22, and they've got, oh, wait a
they're
second,
missing.
because I'm counting one as one is the obligations, government obligations fund. Go ahead, which one?
They're missing the best one,
Oh, yeah, yeah, you're
Misty.
right. Misty, yeah. Interesting. Why are they missing that one?
Now it's probably so new that they didn't have it in the fund last month, and since it was
That's what it
just
is,
paying its
because
first dividend.
I think this went public before Misty, actually. Yeah, or it was close to the same time. That's interesting. That would be a good question for Jay. Good observation. Yeah. So the average of these 1954. Okay, so I already estimated the dividend to be close to what it was before. Um, anyway, so that's that one. The YMAG, of course, is just the, let's see, that's the Magnificent Seven. So how many of these do you hold? Let's see, is it Brian or Russell? Yeah.
Well, yeah, Brian is correct. I only have Misty. I'm all in on one.
Oh, that's it. And how long have you been in that one?
2 weeks.
Okay, great. So you've gotten some of the upside.
Yeah, yeah, I'm excited. Obviously, it took a downturn over the weekend with the Bitcoin stuff, but I'm
Yep.
hoping next weekend with the halving and stuff to have a bounce back.
And the halving is actually next week officially, right?
Officially, it's coming up. There's some dates. I think it's the 20th. Am I right?
That sounds right. 420 for halving. Great date they picked.
Yeah.
Okay, so Bitcoin is up 1788. Of course, it trades 24/7, but let's see. Let me X out S&P. So yeah, like you were saying, it crashed a little bit yesterday, like 10%, and it's coming back. It's I think for 1 month it's down almost 9%. 5 days down 5%. Up 45% for the year still. 1 year, wow, 116%. What's interesting, if you look at like Beto, the dividend one from ProShares, um, it's paying a dividend, of course, but it underperforms, and even in total return, if I look at total return, let's see. No, it's actually pretty close in total return, looking at it now. But the dividend obviously gets a different tax treatment. So, Brian, what other dividend funds are you in besides Misty?
That's the only dividend fund I own. Marathon, obviously not a dividend stock.
Oh, Mara,
So I'm all
MARA.
in on stuff. Yep.
Okay.
Yep.
This has been a good one for actually some
So
selling some
I have.
puts. So you got Mara.
Yeah, I did that for a while, and then now I'm down on my position because of the market going down. So,
Ah, yeah. Yeah, that happened. Well, I actually
like, I
got
was
out.
debating
Yeah.
selling covered call, but I'd have to go out in time because I bought it around 21 a share. I think it's at like 17 now.
Hmm.
So to get any premium, I have to go a month or two out.
Yeah, to harvest some more premium.
Yeah.
And what's
So
your
I've just been holding.
yeah, what's your experience with options?
I'm pretty experienced as far as like knowledge level, but not putting it into practice. So
Same here.
little nervous sometimes. So
Absolutely. Yeah, when they move against you, it's a tough one. Like 2021 was a great year for just doing calls, and then 2022 was probably the worst year for that. So you follow the wheel strategy thread we've got in the Discord?
I do follow it. I don't take the trades, but
Yeah.
it looks very interesting. That's for sure.
Hmm. Yeah, I'm behind on it actually. I did a couple of them. The last one I did was in the what was it, the CLSK, the Clean Spark one, but that one I ended up rolling it out for a loss. Um, I haven't even looked. Oh, they posted them Friday, I think. Wow, that's impressive. Yeah, they're kicking butt. Let's see. Oh, I think we had
I see you're
another.
rocking the glasses.
Yeah, yeah, I am. They seem to be a hit for sure. I try to at least, I don't always get everything right, but I try to at least look the part. So let's see. Okay, marathon, that's over there. Oh, I'm gonna look at the next, let's see, where was my tab over here? YieldMax. Um, Shoot, where did it go?
I think you have too many tabs open.
Oh, I do. Everybody tells me that. I'll just pull it up again. Okay, so, oh yeah, I looked at that. So YMAG, and I think this one's actually in the stocks, if I'm not mistaken. I think the dividends could even increase this month. Oh no, it's in the seven ETFs. So I don't know. The dividend might be around the same. Yeah, it's in the AMZY, Apple, Meta, and then let's see, Google, Microsoft. Oh, he left. Um, yeah, let me close some of these while I'm at it. Oh, here's my other YieldMax tab. Oh, we're frozen up over here on the screen. Okay, let's see. Back over here. I'm going to look at all of them. Yeah, Coney, it's got a really impressive almost 130% dividend. And then, of course, last month, 280. That's really impressive. There's the NAV. 1 month. Wow, look at that. But we can't expect that to sustain. 30% in a month is kind of unsustainable. Okay, so they've got a put at $260 strike. That looks like the short position. Treasuries, they've got a long call at 262, and they've got a call at 270, and then they've got another one at 277.50, another one at 260, and then cash. So that's Coney. Let's look at Tesla, our favorite one. We've got a $170 put, $175 put, some T-bills, 177.50 call option, $170 call option, and a $175 call option, and then cash. So let's look at Tesla stock while we're at it. Let's see here. Tesla. How are we doing with Tesla? Let me take these silly things off. Okay. Yeah, my phone doesn't recognize my face with those on. Okay, so Tesla, we're at 171.05. So it seems like they've got those spaced out at a reasonable level there. Let me get rid of the S&P here. Okay, let's see now. Let me close this one out. Yeah, S-full. We had the Simplify people on last week. I thought that would actually be more of a hit, but it seems like really the only one that really performs is when we have Jay on. Although I have enjoyed having all the other fund managers on, of course. All right, let's see. So Aptly is the next one. I'm going to look at them all. Oh, okay. So we've got a $170 put. We've got a $180 call option, $170 call. Let me see if there's more. I'm going to download the spreadsheet. Oh, I see the comment from Charles Ollinger. Wheel strategy still all about total returns, not just premium sold. Yeah, I agree with you, Charles. Um, I'm just on some of them, I'm not like necessarily wanting to own the stock, so I know that's not quite, what the strategy is. But I know ideally you're supposed to be in it, and then if you get assigned, then you own the stock, and then you sell covered calls against it um, at like the same strike that you had on the put side, so you make premium both ways. I definitely get that, so I know I'm not quite following it to a T. Anyway, I guess where'd the spreadsheet go? I thought the spreadsheet came up over here. Oh, here we go. Yeah, okay, so this is what they have over here. I just wanted to see if there's any more. It's pretty simple. They've got the put and 2 calls at 2 different strikes, and then some treasuries and some cash. Okay, so that one is pretty simple. Okay, I just wanted to make sure there wasn't anything hiding under there. All right, so that's Apple, the Apple one. Now let's go look at the next one. Let me check something here. So AMZY is going to be the next one. All right, AMZY, 35, almost 36% yield. All right, so we've got a $185 put. We've got some treasuries. We've got a call at 190, a call at 185, some cash, and some government obligations fund. So most of these have the same strategy. They have the synthetic strategy, as we call it, with the put and the calls at 2 different strike prices. Let's look at Apple. Apple's really having a lackluster year. 176.55. Yeah, we're down 8% for the year. For 1 year, only 10%. That's that's very like uncharacteristic of Apple. But I feel like they're not really putting out anything new. Look at the 3-year return. So they're averaging like 12% a year. So really their best years were like from 2019 to even 2022. Since then, they haven't really recovered from, I mean, they're at new highs, but from 2022, yeah, they haven't really since the summer. They've been flat. They're hitting like that resistance up here, it looks like. Okay, so that's Apple. The Appley one is definitely kind of flat. I just wanted to look at Apple. I know I'm on Amazon, but I just want to look at Apple. While we're at it, let's look at Amazon. Amazon, the best buying point would have been December of 22. Year to date, we're up another 22% in Amazon. We're up 90% for 1 year. 3 years, only 10%. That's because we had the huge drop in 22. Here we were at the end of 21, only 5%. Wow. So Amazon seems like its best years have already kind of happened. Interesting. I mean, it's still beating the S&P over 5 years, but 3 years, it's underperforming the S&P. 1 year, it's outperforming because it's been rebounding. Interesting. 6 months, 41%. Okay, let's look at the next one. So all 19 of these follow the same model. All right, Google. Ooh, Textron. Blake is on. He mentions Textron. I haven't heard of that one in a while. That used to be on my radar a long time ago. That's funny you mentioned that one. That had to be on my radar like 6 or 7 years ago. They make UAVs, strong financials, tailwinds from the elevated levels of conflict we may face going forward. Yeah, Textron, when I actually used to screen stocks and stuff, they used to call them the S&P reports, and they had that one as a five-star fund back then. Okay, so GUI, let's look at this one. Um, so $150 put, 157.50 call, and $160 call, and 150. So they have, let's see, calls at 3 different strikes and then a put. So that seems a little more complicated. Yeah, we'll look at some growth because I did say we would look at growth as well. How long have I been rambling on here? I don't want to go too long. Then again, I don't want to just be late and then leave early, you know. Okay, let's see. NFLY. I'm just going to look at the rest of these, kind of breeze through them real quick, and then we'll get to growth, which is actually what I really want to talk about too. Okay, so $635 put and the same treasury bills calls at 3 different strikes. Now there's a wider spread here. This is a 635 strike price, 680, and then 685. Let's look at Netflix stock while we're at it. Okay, so in 1 year, Netflix is up 88%, 28% year to date. That's pretty awesome. So the calls seem to be fairly well out of the money. Now, I've heard some people say they try to replicate this strategy on their own and make nice premium. I mean, of course, you very well could, but to each their own. Okay, Netflix, that's that one. Just want to breeze through the rest of these here. Microsoft. So Microsoft, we've got $425 put. We've got 430, 435, and 425. So spaced out a little closer there. How's Microsoft doing while we're at it? I want to look at the underlying as well. I still think in a lot of cases you're going to be better off in the underlying. In fact, let's look at it. We're talking about Microsoft. Let's look at this one. This is a good case study right here. Okay, so if we go out for a year, MSFO debuted August 25th. So over the same time frame, or since it doesn't show it, let's just do 6 months. So over 6 months, the underlying stock far outperforms the YieldMax fund. Okay, let's look at total return just to do this. Oh, total return, actually, they're even. So here's the difference. Okay, so they're even. The dividend fund and the underlying are even. You may think that's a win. That's good, but remember, the dividend is in most cases taxed as ordinary income, and of course, the stock itself, if you've been holding it for a while and you take your own dividend or you pay yourself your own dividend, you're getting long-term capital gains tax, which is 15% versus whatever tax bracket that you're in. Okay, so but that's good news that they're basically performing the same over the same time horizon. Yeah, they're almost identical. So that's pretty good. I mean, it seems like unfortunately the only one that's like the outlier, the underperformer, is Tesla. So those of us that own that are still, holding the bag on it. Okay, where are we? Next one, Microsoft. Oh, JP Morgan, one of my favorites. JP Morgan's still paying a 40% yield. So if they didn't have Tesla, honestly, it wouldn't be horrible. It wouldn't be really too bad at all. Okay, so a $200 put. That's just crazy to think this stock's hitting 200 and calls at the same strike, a short and a long call. And then the treasuries. Let's look at JP Morgan. They've been doing really well. I think they just beat earnings again. Or no, actually did they miss earnings? So Citibank met their earnings. JP Morgan missed them. It happens every now and then. So they're on pace with the S&P this year. That's interesting. Wow, they dropped like in a day, 7%, or in 5 days. Wow, look at that. Okay. Yeah, it's approaching 200 a share. All right, next one, PP. I'm still waiting for PayPal to have a rebound, actually. So 30% dividend, and let's see, we've got a $65 put, 67.50 call, and then a $65 call. And then let's look at the stock. $64.59. So it's moved up $5 since I was last looking at it in the beginning of the year or so. Well, I just say PP because PYPY, great name for a fund. We've got PP and Misty. Go figure. Um, it just seems like that's how it's pronounced. Anyway, on we go. So PayPal is 64.59. So yeah, since the last time I looked, it's what am I trying to say? It's $5 higher. Okay, next one. Moderna. 46.32% dividend. And I feel like there's not a lot of buzz from Moderna lately, other than maybe they're working on some cancer vaccine, which I've heard. Okay, so we've got three calls in this one. We've got a $110 put treasuries, and then we've got a $108, $109, and then a $110 call. And those are our positions there. MRNY is at least diversified from the rest of the tech-centric covered call ETFs. Yeah, that's true. That's true. Let's look at good old Moderna stock here. This is 105.14, up 5% for the year, almost 6%, down 32% in the year, down 24% over 3 years, probably since 2021. Yeah, since the summer of 2021. Look at that. It had been up like 250% when all the vaccines were coming out. Okay, let's look at the next one. So we got that one. Misty, one of our favorites. Misty, 140% yield. How long do you think this yield is going to sustain at this level? $4 a month. So that's $48. If it pays out a $4 a month dividend, that would be $48 a year. Okay, or actually $1,700 put. Oof. 1635 call, 1670 call, and 1700 call. Let's look at the underlying. MSTY. I'm pretty sure in this one, the underlying is going to outperform the YieldMax fund. Okay. By the way, if anybody hasn't submitted a portfolio, I'll review it. If you do, definitely submit it. So a year is not a fair comparison because this has only been around for like 2 months almost. So we'll have to look at year to date. That'll be our closest horizon. But 360% for the last year for MSTR. That's incredible. For the past month, they're both down. Year to date, MSTR is double MSTY, but then again, it had like a 2 month head start. If we look at total return is here. Yeah, still lower, but then again, the underlying has 2 more months on it. Interesting. Okay, next one is going to be OARK. Good old OARK. 47% yield. And let's see. $50 put. Calls at 48.50, 49, and 50. Let's look at the ARK fund while we're at it. 46.51. I think it's starting to rebound. No, it's down 11% for the year. It was up 23% over the past year, so it almost paced with the S&P 500. The ARK Innovation Fund. And let's see, we got a $50 put. We've got 48, 49, and $50 call. We just looked at that. NVDY. One of my favorites, NVIDIA. I needn't look at that one tonight. 118% yield. $915 put. 915 and 920 calls. All right, so we'll breeze over that one. The Meta one, 64% distribution. $515 put, $525, so two puts, and then so it's a little more complexity here. $530 call, 515, 525, so those are kind of grouped together. Let's look at Meta while we're at it. Meta is over $500 a share. Incredible, almost 45% for the year. Look at that. That's on fire. Almost like Nvidia. Okay, last few. We've got I already looked at Coney. So DISO, we've got like 5 more. Disney is on a rebound too, actually. I guess Bob Iger is turning things around, or starting to. 40% distribution. We've got $120 put, $117, $118, $120 calls. So that one's yielding pretty good. Exxon Mobil, one of the least buzz ones, 17% distribution rate. $120 put, $123 call, 126 and 120. So that's that one. AMDY, I believe a competitor of Nvidia, 74% yield. So we've got a $200 put, 107.250 call, $200 call. And then last two, SQY. So SQY, excuse me, we've got a $80 call, $80 put, and $80 call. So same strikes for this one. Wonder why there's a difference on some of these. That's actually something I don't know. 71% yield for AIYY. $22 put, $22 call, 24.50 and 24. So grouped together. All right, folks. Now Act 2 of the show, we can get into growth now. So let's look up the first one Blake mentioned, Textron. Like I said, this is one I used to follow. TXT. Okay, so Textron 93.96 for the last year, it's up 39%, 17% year to date, doubling the S&P. Over the past month, it is 2.45, higher than the S&P. Let's look at some financials. Let's see, revenues are steadily increasing each year. Let me go by quarter over here. So quarterly, looks like some fluctuation, but inching up for sure. Let's see. So that is income statement. Let's go to cash flow. What's the other ones he mentioned? So he mentioned Textron, Raytheon, DFIN, Charles mentioned. So we'll look at these three. Okay, so for cash flow for Textron, we've got obviously very positive net income. July was very impressive. September, December, we dropped a little bit, but was still higher than April. Cash flow from operating looks solid. Operations, investing, they're losing a little bit there. Capital expenditures are pretty high, it looks like. Cash from financing, looks like they repurchased some common stock that led to negative balances in financing for 5 of the last 6 quarters, from what I can see here. Yep, interesting. Okay, and then for supplemental items, so net change in cash in the last quarter was very positive. So overall, I guess that looks pretty good. And then we can look at RTX, which was Raytheon. Let's just look at the summary first. The quants rated a strong buy, Seeking Alpha rates it a buy, Wall Street rates it a hold. Year to date up 19%, looks promising. Oh wait, let me look at the other time horizons. Down 1.4 for the year, over 5 years, 17.56%. So it's done the same in a year that it's done. Most of its return has come from like year to date. But let's look at financials. Okay, let's go straight to cash flow. December looked like a really good month. They lost money in September. Um, Something happened in September that was probably non-cyclical. So there's a process when you analyze statements. They call it scrubbing the statement. You can actually, if you see non-cyclical events, you can scrub those out and then kind of like reanalyze. If it's a non-cyclical event, it's like an exogenous event. You can scrub that out of the statement, and then you get a better idea of the trend because an event that happens one time is unlikely to, repeat. So they call that scrubbing. Okay. Operating activities look negative for, let's see, ooh, a lot of the last several quarters since December 21, and then we just broke into the positive here. Cash from operations looks positive the last 3 quarters. Cash from investing is negative because of sale of intangible assets and capital expenditures. Debt repaid, negative. Cash from financing. Free cash flow per share. We have a positive dollar amount. Change in net working capital is negative. Debt repaid looks like it's moving in the right direction. And then we'll look at DFIN. Oh, a direction fund. I'm working on getting these people on too. Hopefully, if I get them on, at least 2 or 3 of you will watch. So the Direction Daily Aerospace and Defense Bull 3X Shares Direction Daily Aerospace ETF. This one is rated a buy by the quants. Down 1.71% year to date, up 12% for 1 year. There's just so many funds, like we can't invest in them all. We've got to really pick the best one. So what did Blake say as far as Textron? He mentioned UAVs, strong financials, and tailwinds from the elevated levels of conflict we may face. Yeah, that seems likely. Down 50% for the year, but the tailwinds obviously are coming with, the current events we're dealing with. Okay, so defend. Let me go look at the financials really quick. Over, let's see. There's not going to be financials because it's an ETF. Duh. It's been a long weekend. Okay, Goldman Sachs, Sterling, Fixing, Port, RTX, which is Raytheon, Boeing, Dow Jones, Lockheed Martin. Oh, this is a good fund of funds. Textron, General Dynamics. So these have like 2 of the 3 we just looked at. If you want exposure to all of them in an ETF. Interesting. Oh, Northrop Grumman, Axon, General Dynamics, TransDigm, Lockheed Martin, RTX. Interesting. All right. So we looked at dividends and we looked at growth. So I think that's going to do it for tonight. So thank you all for tuning in. Like, comment, and subscribe, and join Discord if you haven't already. Thanks to the one person that did participate. He left pretty early on, but I appreciate him participating. If anybody has any questions or comments or concerns, feel free to reach out in the Discord or the comments. Of course, if I get something wrong, you guys are very good at letting me know very quickly. But yeah, so let me know, either way, comment wise. Feedback is always good. So, well, thank you all for tuning in. Like, comment, and subscribe again if you haven't already, and we will see you all tomorrow. All right, take care. Have a good night. Bye.